Good morning and welcome everyone to Moneycontrol live stream. Of course, the market has opened. We are looking at a good start coming in for the market. 0.1% of gains coming in for Nifty 50. Well, it has sustained, at least right at the opening, about that 21,000 mark. Remains to be seen if we are going to surpass or sustain that momentum through the course of the day. Do bear in mind the fact that the Nifty ended at that record high level, but short of that intraday high level, where it sustained about that 21,000 mark. That is the key that we need to watch out for. Bank Nifty. Let's actually talk about that. Bank Nifty also, we're witnessing some amount of momentum there. Almost 0.2% of gains coming in for Bank Nifty index. And it is a good start to even the Bank Nifty. PSU Bank Index is what I'd like to talk about. It's been near that record high levels for the PSU Bank Index. Mid-cap, of course, they've been outperformers there. Gains to an extent of 0.4%. And PSU Bank, look at that. Well, pretty screen there. 0.75% of gains coming in, at least for the PSU Bank. Nifty IT, that's the one that we'd be watching out for. TCS, where the acceptance ratio is higher than the last time. Infosys, where there is expected to be a bit of hit. Let's also pull up Infosys before we address in the top gainers and the top losers of the day, just to see, because Infosys ADRs were down by almost 3% in the previous night. But so now it is a negative start coming in for Infosys. The CFO has resigned, not the first time that there is a management change, typically which has taken place for Infosys, at least at the second level of the management, which of course has been the trend which has been shaping up for the entire industry put together, but Infosys, so to say, particularly. Let's talk about the top gainers and the top losers on the screen before we navigate our conversation to the technical side and check with Brijesh, what are the kind of levels and the recommendation that we are looking at. Well, Hero MotoCorp, M&M, Hindalco, these are some of the top gainers that we have. Tata Consumer Products, Bajaj Auto and Adani Ports. Well, these are some of the other top gainers that we have on the screen. Talk about the top losers there. Well, BPCL, ONGC, Eicher Motors, these are some of the top losers. Apart from that, we're also looking at L&T and Apollo Hospital. These are some of the other top losers that we have on the screen. But let's bring in our technical guest for the day, Brijesh L, who heads technical and derivative at retail research for IDBI Capital Markets. Morning there.
Yeah, morning, madam.
How is the trade setup looking like? We have started about the 21,000 mark. You think we are going to sustain about that level? And also your word coming in for Infosys.
Yeah, so definitely, I think the trend is positive, and for the Nifty specific, what I believe, maybe for the first 1 hour, maybe a half an hour trade, if we sustain above 21,000, then there is a fair chances. Maybe from the intraday point of view, we'll see some 100 odd points on the higher side. View is bullish. Maybe till yesterday, if we look at the derivatives data, at 21,000, there was a lot of call writing. So that was one of the resistance zone. So I would prefer to take first 1 hour trade. So if that confirmation comes and we see a close about 21,000 in the till by 10:15, I think that day will progress with positive bias, and we'll talk about another 100 points, maybe 100 odd points on the higher side. That's a view for the Nifty. More aggressive on the Bank Nifty, because Bank Nifty once starts trading above 47,500, I think Bank Nifty will also contribute to this rally. So both the index having a positive view. Coming to Infosys, so I think this, whatever the news we has seen, the charts of Infosys is positive. The slight correction is there, but then this can be viewed as a buying opportunity. I think in the maybe next couple of days, Infosys is likely to bounce back to 1520, 1530 level. So this opportunity should be viewed as a buying opportunity. The trend and momentum both continues to stay strong in Infosys.
All right, that's the strategy for Infosys. It is a buy on dip stock right now, but Brijesh, PSU banks also have been doing exceptionally well. Of course, even the Nifty banking, so to say. Any particular recommendation that you have, and for the private banking space as well as PSUs?
PSU, madam, there are two. One is the Bank of Baroda and then Canara Bank. And these are extremely positive, even though when the market was correcting, it never corrected. So I think that is one we'll keep a watch on. And the Axis Bank, if you see yesterday, there was a slight correction in the Axis Bank. I think it is coming back to the support. Axis Bank was one of the outperform in the last week. So I think this correction can be viewed as a buying opportunity. Axis and IndusInd are the two picks which I think should rally during the week. So Axis and IndusInd from the private space, and Bank of Baroda and Canara Bank from the PSU space.
Sure. I'm also going to come back to you and check with you about the TCS levels and, of course, sugar stocks, what looks attractive within the basket. But let's address the big news of the day. Infosys appoints in Jayesh Sangrajka as CFO with effect April 1, 2024. Of course, Nilanjan Roy has resigned as the CFO, and presently Jayesh Sangrajka is presently the deputy CFO responsible for finance function and also oversees M&A portfolio. Morgan Stanley says that it's maintained that overweight call target and of around 1,600. It talks about the resignation being unanticipated and weighing on the sentiment of the stock, which you can see right on the screen, 0.75% of losses clocked in on Infosys. However, it expects the transition to be a smooth one as always. TCS is the one that we also need to talk about. TCS buyback acceptance ratio is now at 35%, better than what we saw last time, which was 24% in 2022 when the buyback happened. 17,000 crore buyback was subscribed 6.5 times according to the data. And also I'd like to talk about Sterling Wilson, which is launched in a QIP at a floor price of 365 rupees per share. That's also you need to watch out for. The stock is up as much as 3%. But Spicejet, clearly the one which has been flying higher, at least for 3 consecutive sessions, 40% of gains clocked in. The meeting has been postponed now on December 12th, which is, of course, today. That's got to be for considering results and raising in fresh funds, which could be through a different preferential method. And Mankind Pharma, where a block deal is expected to happen, 7.9% of equity is expected to exchange hands, and the block deal is worth around 5,649 crore, with the base size minimum being at 4,935 crore. But Brijesh, I'm going to come back to you and check with you. What do you make out of something like a TCSA and also sugar basket, which is expected to be in the limelight ahead of the industry meet on account of that ethanol blending issue, for that matter?
Yeah, so I think for the specific TCS, I think it's extremely positive. TCS, we should be talking of 3850, 3800 on the upside. So I don't see any correction in the TCS. So this is going to be a very good trade setup, and maybe there can be a slight correction of 50, 100 points, but that should be viewed as a buying opportunity because directionally 3850 is what I believe should be there for the TCS. Now, slowly the IT stocks are picking up. Basically, the mid cap IT and the large cap ITs are contributing. So I think in the last segment we saw that auto was one sector which was contributing. Now I think the IT will start some movement at least for the next couple of weeks. So TCS definitely remains one of the pick for another from the current price. Coming to the sugar space, I think sugar space, there is slight some, even though that ethanol thing is there too, but then I don't recommend any trading setup, but then somebody wants to take a positional bet from 2 to 3 months kind of view. I think that can be Balrampur Chini is one stock which has seen a decent correction and has come to the support levels. So good amount of bounce can be seen in the Balrampur Chini. From currently it has corrected from 480, right now it's 400. So I think definitely this 400 to 380 is a base formation for the Balrampur Chini. I think somebody wants to take the 3-4 months kind of view can take a buy setup in the Balrampur Chini.
All right, for Balrampur Chini, it also remains to be highlighted that the stock currently still sits in an F&O ban. So do be mindful of that fact. But of course, Brijesh, we are just going to leave it at that. And thank you for taking out the time and having this conversation with us.
Thank you.
All right, enough and more ground needs to be covered when we talk about IT, when we talk about sugar space. Of course, these have been the two buzzing themes that can take a lot of traction through the course of the day. Sugar stocks, of course, have been in the limelight for not good reasons for the last 1 week. But would the trend really make a difference now, or are they looking at a different trend? Let's bring in Sumit Jain, the Deputy CIO at ASK Investor Manager, to actually ask this question. Morning there.
Hi, Nickey.
I'm going to start off with your assessment first on the IT stocks. enough and more. These are particularly the sector which is not typically participated into the rally. Few concerns still exist for the sector. We're trying to find a bottom for these stocks where the recovery, sharp, resurgence could come back, but that's not likely found. And today you had a development back in the day that, Infosys CFO has resigned. Of course, the stock is also trading lower by as much as 0.75%. What do you make out of this development? Morgan Stanley, a few brokerages actually suggest the transition to be smooth. What do you make out of this development?
So, first of all, let me not comment into individual business that's against our organization policy. Having said that, the way we look at IT businesses is, in general, they get impacted too much by how globally things will play out. So overall, in general, we don't believe those businesses to grow at a pretty phenomenal pace. Only those businesses which have a kind of right to win, or those businesses which are catering to specific areas, probably could be ER&D businesses. Those are the businesses where we believe growth rates can be relatively faster and for a relatively longer period of time. Otherwise, in general, our stance, our view on IT has been, we have been relatively underweight in that area, and we continue to remain so, just because the longer term growth rates there would be suboptimal.
All right. Would you also want to just maybe not, it's not a recommendation, but how do you look at the overall development which per se has happened for Infosys? The change in the leadership, it's not new to Infosys. You think this is not really factored in much in the stock prices, and this knee-jerk sort of reaction, not a sharp knee-jerk reaction, but some amount of subdued reaction was kind of warranted for the counter?
So see, we do not believe it's going to have a significant impact. In general, IT businesses, the depth of many of these businesses from management side is pretty large. And in general, when a business leader kind of moves out, we need to really see what is the shorter term impact. That's fine. But longer term, unless there is a seriously larger churn in the organization, we generally don't get too much worried.
All right. Apart from that, I'd also want to talk about Spicejet. It's been something which has been quite in momentum and buzzing. For the last 3-4 sessions, we have seen a bit of development around the space where, the company plans to list on NSE. B, you also have the development where they talk about the, a couple of results now being announced, fund plan being raised for the company, approved by the board today in the board meeting. What do you make out of something like a Spicejet and the valuation it kind of commands?
So see, at the current juncture, we actually are pretty positive on the entire aviation space, or for that matter, the way travel itself is kind of playing out. Within that, this is a market which will mean that there are only few players who would really be winners. And that's the way it has played out globally as well. The profit pool is actually being shared by very few. Time and again, you will see quite a few companies trying to kind of shore up their balance sheet, because this is a business where if balance sheet is not very strong, your ability to come back will actually be very, very minuscule. So that's what Spicejet is also trying to do, trying to shore up its balance sheet, come back to the business, and tap the opportunity that's there. We really need to watch out for as to how things there play out, but pretty confident that this industry in general will be significantly bigger tomorrow. We have not seen significantly larger price competition in this industry. And also, while there may be some bits fares here and there, in general, we have seen fares only going up. The ability of this industry to really control cost also has been very large or very high. Over last 10 years, we have seen, the largest player kind of improving their per kilometer per ASK profitability has also been very high. So to that extent, industry should do well. It's imperative for the players in this industry to shore up balance sheet and be a meaningful participant in this space. And that's what Spicejet is also trying to do. So we'll have to see how this really plays out over a long period of time.
The next theme that I really want to chat about has also been buzzing, or let's just say a momentum play, so to say, sugar stocks. After the whole at least last 1 week, we've seen some amount of correction which has already taken place after the government decision to discontinue the use of sugarcane juice or syrup for ethanol production during the year. 2023, 2024. Of course, there is also going to be an industry meet which will take place to discuss about this issue today, but there has been a back and forth in terms of clarification of which category can be used and which category cannot be. Within this space, do you like something? What's your assessment for sugar stock, especially in the run-up to the general elections?
So see, what government has done at the current juncture is to really make sure that there has to be some control on sugar prices in the short period of time. And that is why you've seen this action. Having said that, we really believe ethanol is something which is a very large focus. While we may be at 12% blending rate at the current point in time, over period, we really believe that 20% is something that is kind of possible. And post that, we may see blending coming in diesel, or for that matter, coming in sustainable aviation fuel, and then at later point in time, flex fuel as well. So that's the path that we envisage for this industry. So what would this mean for sugar businesses is those who are kind of focused on the other side, on the ethanol as well. There, the profit variability or profit volatility along with sugar cycle will come down. And that would have some implication on valuation over period. Shorter term, this may be negative. Markets may react in a manner which may not be very conducive in the short period of time. But longer term, we really believe that the industry has an opportunity to make sure that their profitability, volatility actually comes down.
I also wanted to chat with you about the overall trend for the markets, and especially FIIs. Thus far they've stayed away from the market. Sure, in the month of November, we saw some amount of buying come in select few sessions. But overall, in the run-up to general elections, the trend that we've picked up in the last 4 general elections, FIIs have been the net buyers. Do you think that trend will replicate, and by virtue of that, you will see large cap come back in a big way as compared to the broader counterparts?
See, we again have a slightly different take here. When we look at valuations at an index level, we believe that this is generalizing too much. Having said that, the kind of reaction of FII this time we have seen is more because of the confidence on sustainability of many of these policies or continuity of these policies is leading to this FII flows. So over period, we are pretty confident that FII flow into India will actually be significantly bigger as compared to what they are today. In general, there is a flow into India that's expected away from many of the other, or probably from China as well. So to that extent, the pockets of growth globally are few. India is also relatively underrepresented in many parts of the world. So over period, FII flow into India is something that should happen.
And by virtue of that, you think large caps now would do better, and especially themes like Hrithik will make a strong comeback, especially because what we've seen within the IT space, right? We're still trying to figure out if Infosys and TCS will make a comeback in a big way, at least in the run-up to general elections, if not for, just at the start of the year.
I don't want to talk about run-up necessarily to general election, because those market participant, we look from one goalpost to another goalpost. Markets will, as businesses continue to deliver onto their business growth with capital efficiency, those businesses would actually continue to perform in the marketplace. Whether it is large cap, whether it is small cap, mid cap, markets won't differentiate that. Having said that, at the current point in time, in general, valuations of mid caps and small caps vis-a-vis large cap is at a decent premium as compared to what they used to be in the past. So to that extent, large cap may offer a relative safety, but markets are going to be really, really bottom up as compared to these index-based or index valuations that we kind of keep discussing about.
Mr. Jain, what is the theme that you think looks interesting? Of course, we've spoken about enough and more themes when it comes to perhaps IT. We've spoken about sugar. Any theme that particularly is of great interest?
See, I think fortunately, India is a market where there are multiple opportunities to invest. While manufacturing may be one, and manufacturing encompasses multiple industries, capital goods, consumables, logistics, staffing. So that is one large area where India is coming up. Uh, Last 10 years, this theme may not have done well, barring last 2 years. But I believe this is an area which takes lot of time to kind of get into positive cycle. We are already starting to see benefits of that. I think over long period, this area and its allied areas will do well. Similarly, premium consumption, as India continues to grow at a much rapid pace, per capita GDP grows, um, the aspiration level of Indian consumer grows. We really believe premium consumption where penetration level is low, those businesses actually should do well. Then we believe pharma space where if you look at India's overall healthcare infrastructure, the infrastructure is still lot to be done there. Right? So quite a few businesses there should do well. So multiple areas. I have still not completed all the areas that we are positive on. So I would think India offers a lot of opportunity.
Sure, Mr. Jain, with that perspective in mind, I'd also want to check with you with the lineup of IPOs that we've had, and now perhaps being one of the top leader when it comes to the number of IPOs, size, just in terms of number of issues which have come up in this 2023. With that being at peak, do you think the valuations right now seem to be a little frothy given the kind of IPOs that we're seeing usually, which is seen at the peak level? What's your assessment, and anything that you like within the IPO space? There are 3 IPOs which typically open for subscription this week too. Inox India, you have India Shelter Finance and DOMS. Are you looking at any of those?
So see, if you look at valuations or rather IPOs in general, at least in the past, track record of many of the IPOs have not been great. In general, they come during when cycles are great, and over a long period of time, very few actually would be making money. So we have to be really focused on the kind of management that we are aligning ourselves with, the kind of strength that the business has, and not paying too much for those businesses. As markets keep moving up, obviously the task gets harder, but that doesn't mean that there aren't going to be good IPOs. In general, what we have seen is the kind of businesses that are coming to markets are a lot better as compared to what they have been in the past. Their business characteristics are also significantly superior. So we believe there will be some opportunities in the IPO market as well. I'll not get into specific businesses within the 3 that you are talking about that we would be positive, or rather we are positive on.
All right, Mr. Jain, we're just going to leave it at that and appreciate taking out the time.
Sure. Thank you. Thanks a lot for inviting me in.
Pleasure. Pleasure is all ours. Well, thanks. With this, it's a wrap and goodbye from the entire team who puts this piece together. Thank you so much for watching. Please do post your feedback for us in the comment section below. Follow us on the link at the bottom of your screen. And for rest of the updates, stay tuned into moneycontrol.com and Moneycontrol app.